For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockinyoursuccess.com/memberships.
Topic of the day is identifying and trading technical failure on long-term charts based on shorter-term price movement. So what I'm trying to say here is that sometimes we're bullish in the longer-term charts, and some of the biggest moves we get is going to be down moves on technical failures when the longer-term charts are bullish, especially when implied volatility is not allowing us to, or not representative of a large move. We kind of want to break this down a little bit. Let's just kind of talk about what was going on in the SPX prior to this week coming up. This is a classic uptrending chart. Okay, so we have, a nice uptrend going on. We have decent speed. We're not overextended at the upside. We just broke out of a pattern. We're coming in and we're kind of consolidating high. Our expectation normally is essentially going to be for the market to rise up. So our technical bias is up. I wanted to note, and I noted this on Market Outlook this morning, our 16 delta IV structure discrepancy, right? So we have a bullish technical bias. We have, I would argue, a bearish or certainly not bullish IV structure coming into the week. So when we have more room on the bottom side to the upside, it's an indication that they're a lot more interested in the puts, or that maybe they're selling calls, institution-wise. In other words, they're doing things to drive the price down on calls, or inflate the prices on the puts. This behavior a lot of times is from callers, especially in an upturning market where institutions are coming in, they're buying puts to protect their long positions, and they're selling calls to pay for the puts. And, they will de-hedge or whatever when the market, if it moves down a lot. Or sometimes they panic out of the calls if it goes up too fast. But that is what tends to happen here. Our most recent daily pattern breakout is here, right? So we have a nice cup and handle pattern. Our support, that puts our support level right here in the blue area. All right, so moving on. I'm just going to shift into a shorter-term time frame. And on this time frame, you can see, as we pointed out this morning, we have pretty much a sideways range here where the market's consolidating. If we're bullish, we're expecting this to go higher. I have this bullish expectation in the marketplace. My question becomes is, when does that change? Well, I really shouldn't be seeing a breakdown of this range, right? Because we kind of have a topping pattern playing out here. You can call it a double top, you can call it a triple top, or whatever. We kind of have a topping pattern playing out. And again, we have a longer term bullish context. We have to favor this breaking to the upside. A break to the downside would be a tradable event, or a potentially tradable event. So just noting a topping pattern here, we have if you take a look at this, I am projecting my price pattern target on a down move. Okay, so the interesting thing here in this particular setup is that I have a support level here, but I have a price pattern target that is below my support level. So what I'm thinking here is, well, if that's the case, if this breaks down, so the first trigger is this breaks down. It tells me that's going down. Because I have a longer term time frame support level, my thought initially would be, well, if I'm bullish and this breaks down, right? So my first thought is, if I'm bullish here, this should break up, it shouldn't break down. It breaks the level, my first thought is, well, if it's bullish, it should hold our longer term support level, and which is also about 50% of our breakdown target. So I would be looking here for the market to bounce essentially if it broke down, and I thought I was going to be bullish. If I break that level, then it's clear we're coming to here. But now right? So now I've broken this pattern, right? If I hit price pattern target on my short term, I've broken the pattern on my long term. That means we're probably actually coming down to here. Okay, so I'm bullish. Oh, wait a minute. I think we should bounce here. No, that failed. Yes, I have a price pattern target, but I have a longer term failure. We're coming to here. Okay, so see how I'm laddering in my thoughts on how that's going to go. The other thing that we have here is we have our weekly range expectation, which is here. So a breakdown of that is also significant. And this candle here, if I'm looking at an hourly time frame, is also confirming that we're coming back down into here. And the other thing that's confirming we're coming down to here is if I do a reverse off the bigger pattern, which is in here, actually it only puts me there, right? So it only puts me there. A lot of times that'll pull all the way down. It's actually not doing that here. But the point is, as soon as the market starts like picking up speed at this juncture, I want to start referencing longer term time frames to see where it's going to bottom. So as soon as I speed up like this and I start slashing levels, so I slash this level, I slash this level, I slash this level, I want to go longer term. Like if I was day trading this and I was only looking at, like, say from Friday to Monday, I want to go longer term. It's the same thing on the daily charts. When my daily charts start really slashing levels, then I want to switch into my weekly charts. If my weekly charts are slashing levels, I might want to switch back to my monthly charts because I want to see where the big buyers are going to come into the marketplace. But that is the concept there, and this is how we can see this breaking down. If we go back to slideshow, we just kind of talk this out a little bit. Think about the long-term and short-term levels and how they're interacting with us. How should the traders or the price react if they're bullish? How would the traders react if they're bearish? Just some things to think about. And we kind of talked about it, that bullish, I'm kind of expecting this to be retested up here and maybe break higher. If they're bearish, then you would expect the breakdown. So if I'm bullish and I get the breakdown, then I have to think about that. Say the price action's bearish. Going into the 30-minute time frame, you can very clearly see our range now. Right? You can very clearly see the range that the market's moving in. We talked about this too. We have a short-term pattern low at 50% of price pattern target. We have a price pattern target and weekly range expectation. So I'm looking at these two things, right? I'm looking at my, if we go back here, I have the 50% price pattern target. This is an important area off of this breakdown. And our weekly range is another important level. So our support levels are as follows: here, here, here. And then from there, if we get the breakdown, we're probably coming down to here. Moving forward, I'm going to go to let's do like a 15-day. Let's just shift right down into, let's shift into 5 minutes. And I'm using 5 minutes because that's what's available on Option.net Explorer. So I'm looking at the price action coming into play here, right? And this is kind of what's happening. And then this is also tied in with a news announcement, right? So, and this is not doing what I want it to do. This is also tied in with a news announcement. So this is my initial reaction off of this. There's really nothing to do, right? This is just noise. Anything from here to here is essentially noise. That's just noise. If I go a little bit further, I get this on my next 5-minute cycle. This is a technical break of that pattern. And realistically, you could trade this, especially if you're trading off shorter term time frames, you could trade this as early as whatever time that we got to close there. If I'm on a 1 minute, the minute close under there. If I'm on a 2 minute, I could do, right, the 2 minute close under there. If I want a 5 minute, I'd probably enter here. Now, you might be resistant to enter because we're coming into another support level, but this is our first breakdown signal. And for me, if I can set up like a short, a very good risk reward, I'll play the probability this will come down. Okay, so we have to be aware, right? This is a news event, and news events can reverse, and they can reverse fairly hard. So I don't want to take like a one-to-one structure necessarily. I want to say, all right, well, if this thing breaks down, even though I have a support level here that's starting, I actually have a price pattern target that's below this because it would be at least 50% of this level here. And I probably want to take that trade, and we'll take a look at that in a little bit. So now I'm in short. I'm getting a little bit of resistance here, and that's normal, right? I'm not really concerned about this trade failing unless we get a close, certainly over this low, and really more ideally probably over like 6,036 is where I might be interested in reversing out of it on entry. When I come into here and I get into this 50% level, I want to take my risk out of the trade, right? So I'm going to be entering here. I'm going to be dropping risk out of the trade here. And then if it continues going, we'll do it at the next level. So if I continue on here, I want to be taking some risk out of the trade, probably here if I can. If I go to the next level, this is our primary support point. I want to be taking risk out of the trade here. And realistically, if I go that far here, I can consider at that point maybe going long. But let's see, that's 15.40 in the day. You can have an end of the day trade with that, right? So we ended up capitulating and bouncing this level. So my point being is this all makes sense. Let's take a look at how we might trade something like this. So not everybody is going to be available intraday, and that's fine. You can also set these up to be sort of automatic. Like I already pointed out, like this price action happening, but even before that happens, right? Before I even see that, if I'm looking at this day here, actually, let me just go to a longer term. Even before that, if I'm looking at this here, I know that I have a breakdown here that I could enter on. So I know what price level that's at. I know I have another breakdown here. If that goes under that, I know what price level that's at. I know I have a fairly hard support level here. I know that if the market goes from here to here, this is the other factor you want to look at. I know if the market goes from 6,039 to swing low at 58.60, how many points is that? That's like 150 plus points. The SPX doesn't move more than that. I want to be taking risk out of that. And if I hit that, particularly if I hit it earlier in the day, I might want to go long there. But that's all stuff I know ahead of time. And I can come in here, I could put an order in, hey, if it trades under here, then I buy this 0 DTE call or whatever. And then if it trades to here, I do a vertical. Then if it trades to here, I do another vertical. You see me do this a lot in different contexts within the membership, within the pro membership. So we know we have this level right here, and I pierce that at 1400. Okay, so as soon as I'm evident that I want to close under here, I might want to take a trade in this. And coming in here, and I'm saying, okay, I can buy a 59.60. Yeah, that's far from the money, but I can buy a 59.60 for like $1. That's where I like to play, because if I'm wrong, then and this thing shoots to the upside, I'm out 125 bucks, right? Not really a big deal. If I move here, especially if I'm in a positive theta trade or whatever, also. And as this plays along, we kind of consolidated for a little bit, kind of held value. Again, I could, if I wanted to, I could pump this up into the dollar range. Sometimes I'll do that if I'm willing to risk more. In other words, if I put on a small position, and then I'm just kind of waiting. We started to get a bit of a down move, but I'm not going to do anything here. Again, you're better off just to lose if things don't go well. Here is our 1500 bar. Notice I moved my position. So I can't show you, if I ignore today's trade, I can't show you that. But what I can show you is we were at 59.60. We got essentially close to the money. We got in the money. I don't like holding puts that are in the money, so I'm shifting it out of the money. I'm going back to the dollar, right? So now I have my $600 or $700 gain that's locked in. If I don't do anything else foolish, it's in there, and we're good to go. Why would we do it at the 1500 time frame? Well, one of the things I'm looking for is when we're coming into levels. Like if you look at where 1500 is, 1500, we're coming into this level right down in here at 59.57, which is on our longer term. That's our price pattern target off of this. So now that I've hit price pattern target, even if I'm bullish and the market wants to reverse off price pattern target, I've made money, which is really, really nice. If it continues down, then we'll play that. If it breaks down, where should it go? If it breaks down, it should go into here. So when I get down into this range here, I'm going to be looking at doing the same thing again, right? So the trades are like pretty much all planned out at this point. If it just reverses, it reverses. And, we just work with that. We can obviously take bullish trades off that if we want to, but I want to work with that. If I go here and let's see when we come into our next adjustment here, which is here. So what happens here is I'm at this time frame. I'm 118 down, right? I'm coming into 1530. 1530, I'm actually coming into this level. This is actually an early adjustment, right? So 1530, I'm coming into here. Realistically, if I want to be more aggressive, I wait to 1540. 1535. So I'm being a little bit 1530s. Let me zoom in so we can actually see this. 1530 is actually here, right? So I'm being a little aggressive in doing this. Realistically, I can wait till we're at least into this level here because that's probably where we're going. But being conservative, I can make this 1530 move. The other reason I might want to make the move, regardless of where I am, is I don't really like being in the money, and I'm pretty much almost in the money at this point, right? So I'm running away from the money, especially if we get some real value in this. I'd run it away from the money. So here. Oh, this actually happened at 1535, right? So at 1535, we're definitely in the money on, let's see, where was that put? 1530, we're at 5930. 5930 here is up here. And by 1535, I'm actually in the money by a lot of points, right? So I'm scrambling to get out to the next level. And again, these can just be vertical orders. So now I level down to $1.30 again. Now on my $200, less than $200 risk, I'm up $3,692, right? So that's a big return for a couple $100 risk. And again, that plays with in the uncertainty. And then I don't know if there was, okay. So let's go back. So now 58.70. 58.70. No, nothing changed there, I don't think. 58. I'm sorry. 59.60. I went to Oh, that's 55. We're talking about down here. 35, 40. Yeah, really nothing's changed there. I think that was probably the bottom. I'd be hesitant to chase this too much with, like, if we were like a 175 down, 200 down in the SPX, I'm kind of looking for a bounce. But you're looking at like a $3,700 gain, and again, on a very small amount of risk.